Hey everyone, welcome back to Corporate Decoder. Today, TuHURA Biosciences Inc. and NVNV just filed their definitive proxy statement, and I am seeing a familiar pattern in their shareholder proposals. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is asking shareholders to approve some share issuances tied to a credit facility, but it looks like they might be trying to avoid a big cash payment by issuing stock instead. So TuHURA Biosciences is getting ready for their annual shareholder meeting scheduled for the 18th of August 2026. This proxy statement is basically a detailed package telling shareholders what will be discussed and voted on and why the board recommends certain actions. At the core of this filing are 5 key proposals. Shareholders will vote on the big one right now is related to a new $50 million credit facility from Parkview Holdings 1. LLC, they are proposing to issue about 1.8 million shares of common stock to Parkview as a commitment fee for this loan. Now here is where it gets interesting. This share issuance is being flagged because Nasdaq listing rule 5635D requires shareholder approval for certain stock issuances, especially when they involve a significant percentage of outstanding shares or issued at a price below market value. The company believes that even though this is a loan fee and not a sale of stock, it might be AG. Aggregated with a previous stock offering to K-Fave Investment 1 LLC, which is also affiliated with Parkview and its owner Vijay Patel. The company is saying that if shareholders do not approve this stock issuance, they will have to pay a $5 million cash commitment fee instead. This is why the board is strongly recommending a for vote on this proposal. They argue that this credit facility is crucial for funding their clinical trials and development programs, and that issuing shares is a more viable alternative to a large cash outflow. Of course, issuing new shares always has a dilutive effect on existing shareholders, meaning each current share will represent a smaller piece of the company. This can impact voting power and potentially the market price. The filing clearly states that if these 1.8 million shares are issued, the ownership percentage of current shareholders will decrease. The proxy also includes the typical advisory vote on executive compensation or say on pay. This is where shareholders get to weigh in on how much the top executives are being paid, and whether they agree with it. The company is asking shareholders to approve the compensation as disclosed in the proxy statement. Looking at the compensation table for 2025, we see Dr. James Bianco, our president and chief executive officer, earned a total of about $3.9 million, and Dan Dearborn, our chief financial officer, earned about $1.8 million. This includes salary bonuses and stock options for 2024. Dr. Bianco earned nearly $6.1 million and Mr. Dearborn earned about $2.9 million, so even though salary seems to be increasing, bonuses, and especially stock awards, make up the bulk of their compensation. Another vote is on how often shareholders should get to vote on executive pay. The company's board recommends voting for an advisory vote every 3 years. They believe this gives enough time to see the long-term effects of compensation strategies and allows for thoughtful feedback without constant disruption. Shareholders will also vote to ratify the appointment of Cherry Bekaert LLP as the independent registered public accounting firm for the fiscal year ending the 31st of December 2026. They have been working with TuHURA since 2018, and the board believes this continuity is good for financial oversight. In 2025, Cherry Bekaert was paid about $259,000 for their services, primarily for audit fees. This is up from around $224,000 in 2024. The final proposal is an adjournment proposal. This basically gives the board the power to postpone the meeting if needed, particularly if there isn't enough support for a proposal. 2. The Nasdaq proposal. This is a safeguard in case they need more time to get shareholder approval for that share issuance. Now let us look at who owns the company. As of the 26th of June 2026, there were about 63.7 million shares outstanding. Vijay Patel through K-Fave Investment 1 LLC and its affiliates appears to be the largest shareholder, owning about 32.8% of the company, which is quite significant. Coming in second is Matthew Naktrab with almost 10%, and Highbridge Capital has about 8.7%. Vijay Patel is listed as owning a significant portion of the company, almost 33%, through his entities K-Fave Investment 1 LLC and Parkview Holdings 1 LLC. This means he has a substantial say in company decisions, and his interests are closely tied to the company's success, especially given the proposed share issuance for the credit line. When we look at related party transactions, the Parkview Holdings 1 LLC transactions stand out. The $50 million revolving credit facility is the main event here. The repayment terms mention that if the company achieves net profits from pharmaceutical product sales for 2 consecutive quarters, they must repay principal equal to 75% of those net profits from the prior quarter. This is a key condition to watch. There is also a consulting agreement with Tendler Biotech Consulting, LLC, owned by Director Craig Tendler. This involves an hourly fee of $1,250 and reimbursements. For expenses, the agreement has a 2-year term but can be terminated with 15 days notice overall. TuHURA Biosciences is navigating some critical finance. All decisions right now, the proposed share issuance for the credit facility is a big one, and its success hinges on shareholder approval. The company is trying to balance its need for capital with the potential dilution for existing shareholders. The significant ownership by Vijay Patel and his affiliated entities suggests his influence on these major decisions is substantial. The biggest risk I am watching is how the market reacts to this potential dilution and whether the credit facility will indeed unlock significant growth to offset it. What I am actually looking for is clear evidence of pipeline progress that validates this financing strategy. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.